Welcome, friends. My name is Avinash and I welcome all of you to another interesting episode of Face to Face Corporate Series. Friends, in this program, we introduce to you emerging corporates and tell them about their business models, their growth prospects. And today, friends, we are going to talk to a very interesting company by the name of Pentagon Rubber Limited. And we have the privilege of having Mr. Ashish Jain, the chairman and managing director of the company. Ashish ji, welcome to the show and thank you very much for sparing your valuable time with us today. We are sure that you will give us very good inputs on the company and which will make us understand your company better.
Your channel.
So
thank you, Avinash ji. Thank you so much.
Yeah. So Ashish ji,
Yes.
my first question to you is that if you could tell us something about your company's business model, and if you could also share with us your business journey, how did this business start about? So इसके बारे में थोड़ा सा if you could tell our viewers and add some color and so that we can make a beginning.
Okay, so I will start by introducing our company, that is Pentagon Rubber Private Limited, and we are in conveyor rubber belting business. The company was incorporated in 2004, and when you said add some color to the entire thing, the only color that we can add is black,
Okay.
because the rubber industry is all black.
Okay.
So that is the color that we have. Okay. Now again, that's the strongest color that there is. Pentagon Rubber has been in conveyor belting business for over 2 decades, and the entire family and legacy of rubber industry is more than 4 or 5 decades old. So that's what the experience that the promoters brought to this business. And we've been in this line and taken this company forward with registrations with all the major corporations, MNCs, government companies, and we are looking forward to growing further.
Okay. Ashish ji, if you could tell us, something about which are the products the company makes and which are the kind of customers the company caters to come directly on your, end user customers. So if you could just give us some idea, what are the products the company makes? Who are the key customers? So, if you could tell us something on this, that would be really be, very useful.
Okay, so our major product, as I earlier said, is rubber conveyor belting, which is used across the board in the power sector, the mining sector, infrastructure, cement, steel, all across. So all these industries, the power, the energy sector is our industry, and we are a direct supplier to them.
Okay. And within the, the customer base, which you told me, any prominent, customers names, if you could share, which are the companies, from steel, infrastructure, any visible names, if you could share, for our viewers, please.
Yes, absolutely. You can take any names and we are already there. When you come to government organizations, Coal India or Steel Authority, or all these companies are our customers and clients. And in steel industry, you can talk about JSW, JSPL, or smaller players. We have all of them on our board, on our customer list.
Okay. And normally, Ashish ji, one more thing which I wanted to ask you, that in our product and our business, how much approval time do we take to actually get approved by the customer? So is there first of all, any approval system? And secondly, what is the kind of time required to actually get all these customers on board?
Definitely. There's a long approval process, depending on customer to customer. There's an approval system of anywhere between 1 to 5 years.
Okay.
So that's definitely there.
Okay. And basically, now the company has already got a customer base. So obviously now new approvals from customers may not be taking that kind of long time, so probably, new customers also, the addition must be pretty smooth, isn't it?
Yes, because see, again, reference model works. Once you're already approved with all the major customers, then with the small players, it becomes easier to get your approvals done. Okay. So that is definitely a strength that we have, that we've built over the last 2 decades.
Okay. Okay, now coming to the business dynamics. I mean, what is the kind of pricing power in our business? Like, is it a volume driven business or is it a margin accretive business? And typically, how is pricing decided? Is it on a customer to customer basis, or do you have standardized products which are kept on the shelf and these are sold on to the customers?
Yes. Now, basically, our product is a tailor-made item. It is a very individualized, tailor-made item. So the prices vary, and they are not a standard MRP standard pricing system. So it's again depending on the requirements we quote, and the prices are formed
Okay.
based on that.
Okay. And these are basically products, Ashish ji, which are basically, original, kind of OEM kind of products. Basically, what I want to understand is that, is there any kind of repeat business or any recurring kind of business which your company generates, or is it just a one-time activity which the company does?
No, this is definitely a repeat business. It's a recurring requirement from our clients. This is it goes as an OEM project also, product also, and also on the replacement and repeat markets.
Okay. So
A
basically,
conveyor belting has, I'm sorry, yeah, a
yeah,
conveyor
please.
belting has typically, a life of 6 months to 2, 3, 4 years. So again, it's a replacement market.
Okay. So one can basically say, Ashish ji, that this is basically a consumable which actually goes through a lot of wear and tear, and then I mean obviously demand gets regenerated once the conveyor belt has to be replaced. So is my thinking right?
Absolutely, you're correct on that. Absolutely.
Now tell me one thing, is this a order book driven business, Ashish ji? Like, do you start with some order book and then you start production? Or is it like, customers which are regular customers, they come to you and tell you that I require XYZ, customized product, please make it for me. So is it more like a order book driven business? Like every quarter you get a kind of a order book status from your key clients, and accordingly, you measure your production and, deliver the product.
You could say that we do have an order book because see, since it's a tailor-made product, well, to make that manufacture the product, the lead time is anywhere around 2 to 3 months.
Okay.
So yes, so we have an order book, and based on that order, we already have inventories, and we start manufacturing the product and deliver.
Okay. So basically, it takes about 3 months for you to actually deliver the product, right? From the time you get the order till the final execution, right?
Yes, approximately 2 to 3 months.
And normally, Ashish ji, now when you talk about 2 to 3 months, then what's the normal working capital cycle in our business? As you said, you need to maintain some inventories also in the system. So typically, what could be the average working capital cycle for the company? And typically, in what time period does the customer, normally pay to the company like?
Yes, well, the working capital intensive business that is ours, definitely. It's approximately 4 months of stocks that we manage. And the creditors come in around 45 days, and the debtors are approximately again 100 and 120 days.
Okay, so basically, I was observing another, some few companies in our industry which also make similar products like you. So I was noticing, that the cash conversion cycle is pretty long. So I mean, is it because it's a kind of a given kind of kind of status in the industry that this is the normal time which is taken apart from the inventory? I think the amount which you recover from your debtors is also slightly longer. So is it a normal practice in the industry to follow, or do you think that this working capital cycle going forward, hopefully you could shorten it or tighten it, which could actually release a lot of cash for the company? So any thoughts here?
Yes, definitely. As we move forward, we are looking at a better cycle on this. Yes, but as you said, this is an industry norm. Being a tailor-made product, it takes a longer gestation period.
Okay, okay. Understood. Now, Mr. Ashish, tell me one thing, that is the company exporting this product, or is it purely focusing on the domestic market? Any thoughts here?
Yes. Well, our focus is definitely on the domestic market since it's expanding at a phenomenal speed. But we do export our conveyor belts. We've exported to over 20 countries in the past, and we're exporting our products.
So basically, the main
But
focus is domestic markets, right?
yes, because the domestic market is growing at a very good rate. Although we're looking at in the future, we're looking at focusing on exports also in a bigger way. Because of the China plus one factor, we're looking at that.
Now you mentioned that the domestic market is growing at a pretty healthy pace, and I think at least the macro numbers suggest that the Indian economy is in the best of shape. We had recently data released for the fourth quarter of GDP, plus the kind of corporate capex which has been done, plus the focus of the government on the manufacturing sector. Now, having considered all these factors, Ashish ji, what is your thought process? How is this industry poised to grow in the next, say, 2 to 3 years? I mean, do you think growth can be in strong double digits going forward?
Oh, absolutely. I am very, very bullish on the India growth story. Being created, the infrastructure is increasing at a robust speed, and so is our power and coal sector. They're all growing in a very, very holistic manner, and we are poised to encash on that and contribute towards the India growth story.
Okay. Fine. I think, Ashish ji, now something on your forthcoming IPO, which I think the company is planning. So if you could just give us some basic idea about what is the kind of objective of raising money from the IPO, and what is the kind of amount we are planning to raise, and basically how soon is this going to happen? So if you could add some kind of inputs here, that would be helpful.
Okay. So we're launching our SME IPO on the NSE Emerge platform. And the IPO, again, the RHP details and the details are there, which can be shared. We're looking to raise approximately 16 odd crores for the company, and most of it is going to be used for the working capital.
Okay. Largely,
And
largely working capital, right?
yeah, so basically, the main reason for our IPO is branding, brand recognition, and credibility. So with this IPO, you get basically a market recognition, and that's the main focus for us.
Okay. Fine. Nicely articulated, Ashish ji. Now, tell me one thing, that one more question on the pricing side. You said that you obviously fill in the tenders, and then obviously your tender gets accepted. But typically in this industry, hopefully, if the rubber prices increase, the raw material prices increase, then how quickly are these prices compensated by the customers? Is it a fixed price contract, or is it like whenever the prices do increase during the time you commission the the project? Do you get these price increases compensated from the customers?
See, basically, how we work in this is we do a natural hedge on that. The moment that's the reason for our stocks, major stocks. The moment we are getting an order, we're automatically covering our raw materials.
Okay.
And that's why it's a natural hedge regarding this. And since we are working across, we're industry agnostic. So we're not focusing only on the tender business.
Yeah.
We have corporates where we don't have tender system and the costs are passed on easily because it's order to order basis. We have our dealer distributor network where again the prices are immediately passed on, and in exports the prices are again immediately passed on. It's order to order basis.
Okay. Okay.
So that way we're naturally covered. Yeah.
And most importantly, on the raw material side, do you have direct arrangements with the, with the input manufacturers? For example, for you, the main raw material is rubber. So all these requirements are sourced locally, or do you even import some of your raw material?
Well, I think we have arrangement with all our raw material suppliers directly, and we buy directly from the companies, most of them.
And how frequently, are the prices change, or is it really on a, on a order to order basis? Like, is there any fixed contract with some well-established players where, you have been working with them for a long time? Anything on these lines?
Well, I think fixed contracts are not really there. It's all order to order basis, and keeping the market dynamics in mind, we accordingly place our orders.
Okay. Uh, Ashish ji, now one basic broad question is, you mentioned that the opportunity for growth is very large. It's growing very rapidly. If you could share with us, in your, sense, since you have, your business on the ground, you're obviously talking to customers, what could be the size of the opportunity, we could be looking at? I mean, just a ballpark number also would do. But typically, currently we are an SME company, but looking at the opportunity, can we say that this is a, at least a 500 crore or maybe a 500 crore plus kind of market opportunity? Because there are very few players. We checked, the stock exchanges, of course, were the listed names, but I believe there are, unlisted names also. So, in all, what could be the size of the opportunity which one can visualize over the next, say, 3 to 5 years, in your sense?
Yes, I think I agree with you. The opportunity is humongous and huge. We're looking at already doubling our turnovers compared to FY22, and we're increasing our capacity by 2.5 times. So we're definitely looking at a major opportunity, and we're looking to grow in the coming years.
And in terms of any fresh capex, Ashish ji, any fresh capex lined up? Like what was the capex, which probably you did for FY23, which is just recently closed? If you could share some data points and probably what is the kind of capacity utilization you are currently working on, because that would obviously decide what is the level of capex you are planning.
Yes, at the moment we're working on 80% capacity utilization, and we're already undertaking a capex as we speak. And our new installed capacities should be online by December end, and our production should run in by April of 24.
Okay. And
we're looking at increasing our capacity 2.5 times.
2.5 times. Okay. And Ashish ji, this funding for this capex is going to be done from your internal accruals, or some debt also will be taken on the books? Will it be a combination?
Yes, it'll be a combination. It'll be a combination of internal accrual majorly, but we will definitely take some debt also.
Now, Ashish ji, if you could share some data points as to what is the broad financial performance, in terms of revenue, in terms of profit, whatever can be disclosed, as of now. So that could help us understand your financial profile better.
Okay. See, again, I think the numbers are already defined in our RHP, and I'm not at a liberty to disclosing much information. But yes, our PAT, we're operating at a PAT of 7 to 8%. Okay. And our top lines are increasing by at least 25 to 30% year on year.
Okay. Okay. So that momentum will continue. Hopefully, I think it will continue in the coming year also. So
Oh, absolutely.
Yeah. I think very good to hear. I think this is definitely a very attractive rate at which you are growing both on the top line and the profitability. Now, tell me one thing in terms of the competitive landscape, Ashish ji. Like every industry has got some level of competition. Now, in our industry, what is the competitive intensity? Are there many players in the organized sector, or typically it is a concentrated kind of market for each player? Does the unorganized sector also play a big role in our industry? So, if you could tell us something on these lines.
Yes, I think like any industry, you have all players in all segments. So similarly, we have in the listed space, we have a competitor in the listed space by the name Somi and Conveyor. And then in the private space, there are many players that are already in the competition with us. But now we're again moving on to the listed space, and we're looking at in cashing on that and enabling our growth in a bigger way.
Okay. Okay, I think nicely articulated again, Ashish ji. Now tell me, Ashish ji, now in our business, we have been present, you said, for a very long time. Now, according to you, what are the competitive kind of moats, or advantages which our company enjoys as compared to some other players? So if you could tell us something, what, Pentagon has done more specifically better as far as customer quality requirements are concerned, execution is concerned. So on these lines, if you could share some competitive advantages which our company enjoys, say vis-a-vis, the nearest competitors you have. So some, points on this would be really be helpful.
Okay, sure. Basically, see, now where Pentagon is slightly different from their nearest competitors is first is the quality basis. We have very strong quality systems incorporated into our manufacturing, which differentiate us from some of our competitors. And second would be our per unit cost. Our per unit cost is slightly lower than again some of our competitors. Other than that, we're again a legacy business, decades of experience that helps our client relationships are built over years, and repeat businesses are generated, so that that comfort of deliveries, timely deliveries, and quality products, all that is there, which we enjoy.
Okay. So basically, I think, your legacy is very important. That is why quality, execution, the raw material, quality, all these things matter when the final customer, the delivery is concerned. Now, tell me one thing, Ashish ji, what is the repeat business for your company? Like, out of your total top line, roughly what could be the business which your customers give you on a repeat basis? Like even if there is a time lag, but typically that clearly shows what is the customer loyalty for your product.
I would say our repeat business is upwards of 70%.
Oh, okay,
Yes.
okay. And
The,
yeah, tell me, please.
I'm sorry. The only thing is we are industry agnostic. So the same customers might come after a year gap, but then it's definitely repeated.
Okay. And broadly, Ashish ji, even without mentioning names, I think you mentioned some names. What could be the total active customer count as of now for a company of our size?
It'll be approximately a little over 100.
Okay, little over 100. And normally, in terms of the product categories, which I missed out earlier, does the company do its own R&D of introducing some new products based on new applications? So, if you could tell us something on that, like within categories like steel, infrastructure, or cement, does every product require to be customized separately? And secondly, on a new product basis, what is the kind of initiative the company has been taking?
Yes, we have a fully equipped R&D lab, which is in-house, and we do all necessary testings and R&D. And newer developments are done depending on the industry. And newer products are introduced, newer raw materials that are coming in, those are incorporated and better products are produced.
Okay. One more thing which I wanted to understand, from the asset utilization side. Normally in our business, Ashish ji, what is the asset turnover? Like, typically, what kind of asset turns can the business generate, on a very normal kind of basis?
Okay, for our industry or for us, for Pentagon, typically,
Yeah,
it's 15x.
for
The asset
Pentagon as
turnover
well
ratio
as
is
for the
15
entire
times.
industry, if you could share both the data points, just for our information.
Well, I would only have the information for us, and that is 15 times.
Oh,
I would not have the information for the
but
industry.
but 15 times is definitely a very attractive number. So basically, my sense is,
Yes.
this business is largely working capital intensive. It is not asset intensive. So is my thinking right?
Yes, you're right. It's more of working capital intensive. It's not as much of asset intensive.
And now, since we are out of the pandemic, COVID has got ended. I think in the next say 2 to 3 years, is the company confident that this double-digit growth, if you mentioned 18-20% top line growth broadly, can we assume that once the company goes public, you get good amount of money for working capital? Hopefully, the market demand is going to be strong, which would help you sustain these growth numbers at least for the next say couple of years. Is your confidence really strong to say that at least for the next 2 years, things look definitely encouraging? Considering the kind of macro positive signals which we are getting, the kind of investments government is making. So broadly, I think can we expect say 20-25% top line growth at least for the next couple of years for Pentagon?
Absolutely. I think, again, as I said earlier, we're definitely very bullish on the infrastructure and the India growth story. We're definitely looking at double-digit growth, upwards of 25%. Even during COVID time, we were operating, we were not shut down because our product is an essential product for the power sector, for the coal sector. It is required. You need the thermal plants to keep performing. Even during COVID, everything was working. The thermal plants were working, so we were working. So even during that time, we saw a very robust growth during COVID period. So now we're looking at a better growth now.
Okay. Ashish, see, for every company, the employee base is a very important asset. So across all employee levels, what is the way in which you motivate your employees? If you could, share your thoughts.
Okay, well, again, we have a very close-knit team. Our attrition rate is absolutely low, very, very low attrition rate. Our entire team is, I can count on all my employees who are, again, over a decade old. So that's how our team operates, and that's my strength to start with. I consider them over the machines and over everything because that's the main strength we have.
I think very well articulated, Ashishji. Now, last question, Ashishji. In our business, in your sense, what is the kind of major risk which the company faces? Like, now we are out of COVID, but in a normal market, if any, drastic event happens, then what could be the single most risk factor in our business?
I'm sorry, if you could repeat the last question because I lost connectivity. You were saying,
I was asking you that what is the single most risk factor in our business? Like, probably,
okay,
in terms of risk management, how are you placed? Like, if you could give us some idea on that, which will help us.
okay. Sure. Well, again, the risk factor, I think what we've learned from COVID is nothing is certain in life, but we have everything in control. That's where the decades of experience and legacy comes in. So more or less everything we are already covered, but definitely working capital was one challenge that again our business has, and we are addressing that as I mentioned earlier.
Okay.
So we were taking care of that
So
also.
basically, working capital was a challenge, which was basically a kind of a foreseeable risk. But otherwise, business is normal; it's growing pretty well. So I think,
Yes.
thank you very much. In fact, nicely articulated by you, and we wish you and your entire team success for the IPO as well as for your company's performance in the future. So thank you very much.
Well, thank you so much, Avinash. It was great talking to you, and thank you so much for having me on your channel.
Yeah,
Thank you.
thank you.